Hello again, everyone. This is Joe Hinches with Beyond the Chart, and this is technical analysis of the stock market today, weekend edition. Today is Saturday, March 21st. Happy spring to everybody in the Northern Hemisphere, and I guess it's fall to everybody in the Southern Hemisphere. So anyway, things are changing. All right, we're going to look at the indices the way we normally do, our indicators, several ETFs. We'll look at the what I call kind of commodity ETF type things. High yield, the long-term bonds, the dollar, oil, and gold. And then we're going to look at market sector type ETFs, the semiconductors, home builders, et cetera, et cetera. And then 5 stocks today: Whole Foods, U.S. Steel, YELP, YAHOO, and Facebook. All right, so let's start off here with the Dow. Up 168 points yesterday. So yesterday was quad witching day. So for those of you who don't know what that is, that means we have the expiration of 4 different things: futures, options, weekly options, and something else too. All I know is it's quad witching on every March, every quarter. Basically. So March, June, September, and December is when you've got quad witching. All right. And so what have we've had this rally. Remember we talked about the potential low last Thursday, Friday low prior to option expiration week. Well, we ended up getting that. We don't always get it, but it happened this time. And we're pushing up. Now, the interesting thing I'm seeing here with the Dow on a daily chart, this is starting to look, remember how I said last time, I said, well, I'm not really sure. I'm looking at, trying to look at different chart patterns. In my last post, I talked about how the power of the first 5 days coming off here in terms of the number of points that were covered on the S&P 500 anyway, was the strongest here. Then it got weaker here and weaker here and weaker here. Okay. Well, and then the more I look at this, the more this is starting to look to me like a wedge, a rising wedge, or an ending diagonal. You can call it both things. But both things, if that's what's playing out here, and usually it's a 5-wave sequence. Usually it's of 3 waves, okay, which this looks like 3 waves. Granted it was big, but we had some of that going on back over here in 2014 too, when wave 3 ended. So it looks like an A, B, C, D, E. This would be the 5th point. So if that's the case, we're approaching a potential turning point here. And given that we've, the move coming off of this low is the weakest of the last 5-day sequences that I've seen, I'm getting a little cautious, a little skeptical. So I'm kind of watching this right now pretty closely. Now, so here's the S&P 500. Now, I drew the same thing on the S&P 500, although I kept the wave count in here the same. I didn't change that, which would imply that we're working our way in a 5th wave, 5th intermediate wave up, and that it's some kind of bullish count. But it just doesn't look strongly impulsive to me. I mean, again, it's looking like this overlapping, which here's the alternate count for it. Okay, that would be an A. An A would be here, a B would be here, the C would be here, and the D would be here. Okay, so this is the alternate count, very similar to the Dow. So again, this bears a lot of watching right now. And the NASDAQ, I was looking at this earlier. So this is 2000. This is March of 2000, okay? This is where I've got these dotted lines. This is dotted line at the high, and this is actually I created a dotted line zone, like a resistance zone, where high got, selling came in off this high, and where selling came in up here. Now, it's interesting. Here's the close for today, for Friday, at 5026.42. There are only 2 days in the history of the NASDAQ composite that closed higher than that, and that was March 9th and March 10th of 2000. These 2 days right here are the only 2 days in the entire history of the NASDAQ that closed higher. So we're rapidly approaching that point. So let's go to current picture. Here we are. Okay. So now this is looking like some kind of fifth wave here. So again, cautious on what we're doing. We're approaching new all-time highs up in here. A couple not very bullish, kind of doji bars. We'll have to see how that plays out. New York Composite. A nice big move on the New York Composite, but again, we need to take out these highs and continue this move and be a little bit stronger. Although I got to admit, 2 out of the last 3 days have been pretty bullish looking here on the New York Composite. Russell 2000. This is acting again very bullish in 1, 2, 3, 4, 5 days in a row up, and 6, 7 out of the last 8 days have been up. Okay, in this move. So pretty strong move from this low point on the Russell 2000 up to here. And where are we approaching? We are approaching, these are all-time highs on the Russell 2000. So we're up here in, the new frontier, and we're rapidly approaching this trend line again. And you'll see it even clearer that on a weekly basis, it looks like we're at it. Let's go to the Dow weekly. Again, I drew this little wedge in here. So getting a little concerned about that. You can make the case that we're getting some divergence in this development on pretty much all the indicators. So, again, this thing, nothing's confirmed out of this until you break down out of it. So, I mean, this can continue to trend to the high side, but this is just a scenario that when you start to see this, you kind of go, okay, let's be on the watch. Let's be on the alert for this. S&P 500, same type thing. Okay, this is the weekly chart of the S&P 500. Now, big move this week. Big bullish bar here, but you still got this formation that's going on, and I think the divergences. I mean, you can see. It's not moving. The price is going up, but the indicator is not going to new highs. Okay, and the same thing again. Buying is indicated by the blue line, DI plus. Well, do you have DI plus going to new highs here? No. So that's divergence. Okay, and the NASDAQ weekly. So here we go with the NASDAQ. You can see, where we had the dotted lines on this. Actually, I think this is the highest close on a weekly basis, and then the interday high on a interweek high on the NASDAQ. So that's where those dotted lines are coming in. And you can kind of see a little bit of a, ending diagonal type thing here, even on the NASDAQ. So again, getting a little wary. Let's see, I'm looking for the New York Composite weekly. Okay, and again, it's still, we thought we were getting this breakout here, okay, back in February, and then it didn't go anywhere, and now we have not continued to break out as of yet. And we got this trend line to watch. We break this trend line, which is really the bottom of the wedge on the other indices. We break this trend line, and I think we're starting to roll over. And the last one is the Russell 2000 weekly, and then this one clearly you can see, again, I have not touched this trend line in months. Okay, I've drawn this trend line in a long time ago, and you can just see how it bounced up to it back in December, pulled down, we've rallied, and we're right up to it again here, the week ending March 20th. All right, so that's how she looks, and I do think that on the Russell 2000, I think we are in some fifth wave move here, 5 waves coming up off of the March 2009 low. This is a very strong first wave, and I am counting it this way right now. This is the best count I've seen. It seems to be in sync with the S&P 500 too, and I can make the case on the Dow Industrial. So I am really watching that. Let's move to the indicators, and let's see if I can find it. I'm going to pause for a minute. Okay, short-term trading index. Again, we're right in the middle here. Yes, we've pulled down, had a little bit of a low reading. But again, it's not really helping us. Let's look at the VIX. Okay, now the VIX is pulled down. This is the lowest reading on the VIX since back over here on December 5th. All right, slightly below this reading here on March 2nd. So again, I talked about how, I was skeptical that it wasn't looking very bullish, acting very bullish, wasn't getting a lot of these, big bullish bars. And then sure enough, it's collapsed back down. Now, so the real question is, are we getting any kind of divergence off this move? We didn't go to a lower low on the RSI yet. But we did go to a higher high on the DI minus, which is the selling pressure here. So mixed signals, and so we'll just have to continue to monitor that. The next thing we're going to take a look at is the high low. And the high low got higher. Okay, so the net new highs minus new lows, 286 more new highs, 52-week new highs yesterday than new lows. So again, remember how it broke this trend line on, what was this, Wednesday, pulled back, and boom, right here on Friday. So we are right up at the previous, kind of peaks. Now, can it go a lot higher? Yes. See how I've got this minus 500? Well, there's a plus 500 up here too. We just haven't even gotten close to it in the last year or so. I mean, you can scan back. And it's been a long time since we got that extreme. And what is this? This is October of 2013. And it was all the way back here in May, June of 2013 that we hit that extreme reading on the high low. But that doesn't mean it can't turn down from here. And so really what this is saying is the peaks of the rallies have been weaker in terms of that high-low strength since then. And so there's a decent chance that we're getting up in that area where this is going to, could turn back down again. All right, next one is the McClellan oscillator. Okay, so the McClellan oscillator has bounced from this oversold territory here, come up, we've come back. Now, remember this congestion that was going on in January and in February, we broke down, okay? Then we pulled back up, and here we are at plus 76. So just above the zero line, we got above the zero line on Wednesday, pulled back down, rallied back up, but we're back up into where we were here, the January, February kind of stuff. So we're not overbought yet, just slightly above the neutral line on the McClellan oscillator. So we'll watch that. Oh, the put to call ratio, the 10-day put to call ratio is 0.67. And that's on the equities only. Doesn't include any indices in that put to call ratio that I monitor. And so again, that's not at an extreme reading yet. And the thing I'll mention is back when I look back at the history of that, in 2007, when we topped out, it didn't get extreme then either. So a little bit of mixed results, and sometimes it's very early. And I am kind of wondering about the fact that last June is when it got very, very extreme. And so, when was that? I mean, if you go back and look at the S&P 500, so back here in June is when the put to call ratio got extremely, extremely bullish, which is a contrary signal that we were topping. Then we got this big move here. But we're not getting any extreme reading on that yet up in here, but it didn't happen in 2007 either. So I continue to monitor it, but that's just one thing to just make a note of. All right, let's move to the high yield bond fund. Okay, so the market rallies, risk on, high yield bond fund, everybody's buying it. So it bounces up off that trend line again. Another close here above the 10. We'll see whether this has legs or whether or not this short-term trend is going to continue to hold, because the 10 is crossed below the 21 and it's trending down. And the intermediate, the long-term trend is to the downside at this point. So we'll have to continue to watch that. The next one is the Treasury bonds. Okay, TLT, 20-year Treasury bonds. So the rally is continuing after it broke this downward trend line. It's rallying. Of course, this big move came after basically the Fed has, kind of downgraded their perspective on the economy, and that has dampened the thinking that they're going to raise interest rates soon, and so interest rates are declining. And of course, the market was telling that's what the market was saying into the end of January is interest rates are declining, long-term rates, and now we're continuing that move. Now we'll see how long this lasts, or whether, this could be, if this was a peak, and I need to do an Elliott wave analysis of this, honestly, because this, you could have had a first move A down like this, and this could just be an A, B, C, B move. Okay, this could just simply be a little zigzag counter trend move, and then we come back down and resume the trend to the downside. But right now, short-term trend is to the high side. The next thing we're going to take a look at is the dollar index. Okay, so here's the US dollar. It's starting to consolidate a little bit in here after that big move on Wednesday, and then it got a little tighter and a little tighter on Friday. So here is my best assessment of the move right now from a wave count perspective. I think we had a 1, 2, and then we had a very strong 3. This was a fourth wave within that 3. You could have, this didn't count out very well in terms of looking at it from a 1, 2, 3, 4, 5, again, triangles typically occur in a fourth wave position or a B wave in a retracement. And so this fits the scenario pretty well to me. Strong, very strong third wave. Now this would imply a fourth wave pullback, which I would expect to pull back into here. Given that this was a deep retracement, this was actually 61.8. And it doesn't look like much until you zoom in and go, oh, well, really, it did pull back 61.8% of that first move. And so now when I look at this and I measure from here, the third wave, and take a more shallow 23% of that, it comes right to the top of this third minor wave in here, which is right in here. So I'm expecting fourth wave to come back down to here, and then a fifth wave to resume, and that fifth wave would be, let me rescale that. I guess I got to go this way. Puts it up into here based on a Fibonacci projection. So we'll see if this plays out this way. This is kind of interesting, kind of fun to do just as a foresight. This is not a projection. This is not a prediction. This is, what I would call an estimate, a scenario of mine, and we'll see how that plays out. Okay, the next one and last one on the commodity related type things is gold. And we'll see if I can find it. Yeah, there it is. Okay, so now the scenario I've got in gold is, because this has come down like this and because of this three wave, I've revised this. I am now thinking that that we're in a fifth primary wave to the downside. Again, this big triangular shape was a fourth wave. Okay, so therefore, instead of this being a fifth wave complete, this is the first wave of a fifth primary wave down. So that means we had 5 waves, 1, and then an A, B, C, 2. Now we're working a third intermediate wave to the downside is my best estimate based on these counts. And therefore, it looks like we've gotten 5 waves down for a minor 1. And now I'm expecting some kind of pullback. So the real question is, how far back do you retrace this minor wave 1? 38% is here, 50% is back up to here. So we'll see what it does and how far it retraces before it then continues the move to the downside. All right, that's the look on gold. And let me zoom back out so you can see what I'm talking about. This is what I think we're talking about. I think that we had 1, 2, this very strong 3, this triangular shape 4, and now we're in this fifth wave, and that this was not enough to be the fifth wave based on what we've had since then. That's why I've revised that count to the downside on gold. Okay, let's take a look at semiconductors. Basically semiconductors have bounced back. So it bounced back, but they've not gone to a new high. But the market hasn't, most of the indices haven't gone to a new high either. So this is basically bouncing back with the market. Okay, so here's the home builders. Looks like it's doing just a little bit of an A, B, C possibly. So the real question is, has this topped out? And again, haven't done enough of a wave count to be able to see. I don't see a clear 5 waves here. Okay, So we could be still moving to the high side, and it's come back. So the home builders come back, which again, with interest rates, long-term interest rates continuing to drop, that's what you would expect, and you would see that impact. Now we'll look at the XLF. So here's the financials: banks, life insurance companies, etc. And they've come back. A little bit of consolidating last 2-3 days, but nice bounce back after this big move to the downside. I'm actually surprised with how quickly this came back and has gotten above this congestion and seems to be trying to consolidate in here. Now again, has not moved above this high, and this will be very interesting to see. Do we have enough power? Does it continue to move? The short term, intermediate term, and long term trends from a moving average perspective are all aligned to the high side. So you got to say that's a positive for the XLF. All right, now let's take a look at the biotech. Okay, IBB has been screaming, as have a lot of the biotechnology stocks, and so this is really pushing here, getting a little vertical, getting a little extreme. We're getting outside the Keltner channel, and if you'll notice, I just happened to go back and look, it doesn't stay outside the Keltner channel very long. And here's 3 days in a row, and then wham. It just it doesn't do it. Now we've had a couple of incidences where yes, it continued to push, but when I glance back over the last year or two, you don't get very many days. This is the most extreme reading. This was back in January 2014 when move was kind of kicking off, and so here we are at the tail end of a move, and we're getting up here. So if I was trading IBB, I would be getting very cautious and tightening my stop is what I would be doing. And I'm not trading it. All right, XLE, the energy, is the last one I'm going to take a look at, and let me find it. Okay, so oil bounced back some. XLE has bounced back. Again, we had this move here, got above the trend line, failed, came back down. Now we're bouncing again. So let's take a several month perspective. What does it look like in here? I mean, you can see, it just looks like it is right now kind of chopping. So we'll see whether or not this can hold, and have we put in a bottom in here? It sure seems like it's trying to do that. So we'll just continue to walk. But, the short-term trend is to the downside. The intermediate's starting to turn back to the downside. Long-term is to the downside. So you have to keep that in mind, keep that perspective as you start to look for the setups. All right, let's take a look at stocks now. Whole Foods. Okay, Whole Foods has had a big run, and now it's pulled back. Short-term trend, this move over the last few weeks has just trended down. Short-term trend turned negative here is when the moving averages crossed, kind of confirmed the short-term trend. But you notice the market always, the price action always tells you first, and it's jump down below the 10. We are down here in extreme, reading. Well, no, we're not. We're not below 30 on the RSI. 70 and 30 extremes. So we're not there at any kind of extreme sell-off. But what we are in that area where sometimes you get a bounce when you're in a bull market. Okay, see, like back here, support came in. So we'll be watching to see, because it didn't go to a new low on that. And let's see, selling doesn't look like it went to a new high. Yeah, slightly. And this isn't exactly confirming that divergence either. So jury's out a little bit on whether or not. Just going to have to keep watching the we start to get a couple closes back above the 10, that could make a difference. Okay, the next one is United States Steel. Okay, so U.S. Steel is again also looking like it's trying to put in a bottom. It's broken above this trend line from back here in October. Downtrend line, and it closed above it, pulled back down, closed back above it again on Friday. So it looks like it's trying to put in a little bit of a bottom. Let me blow this up. I just saw something that, and I know this gets a little messy with all the moving averages and everything in here, but you can, let me use my little highlighter deal. You can almost make the case that we have a little bit of a, neckline right here, and that we're doing some kind of, possibly some kind of head and shoulders bottom in here, and that's what you'd have to keep watching for. Okay, that's what I'd be watching to see, is that something that's turning here on U.S. Steel. All right, let's take a look at YELP. Okay, YELP continues to look negative to me, and I almost put out a trade idea based on this price action here. I'd been watching this, and when it got this close right where it was at here on Thursday, I almost put out a trade idea. I just don't trust YELP enough, though. I mean, it looks like it's breaking this trend line, and it kind of continued a little bit more on Friday. I do think overall, it's been negative. It's just kind of choppy. I do think we're still in this big corrective action, although I think there's more to the downside, especially based on this price action in here. I don't know, this stock has just burned me a couple of times, and so I get cautious after that happens, and so we'll just continue to watch. But right now, if I had to say what I think is going to happen with this, I think it's going to continue to break down, kind of a little bit of a swing move, almost a reverse cup and handle, if you will, if you can see that, kind of a cup and a handle, and here's the top of the cup kind of thing, and that would imply a move down. Okay. All right, so much for my drawing. And now let's get back, take a look at YAHOO. Okay, I talked about YAHOO before, how I said, it had a chance to break here, didn't, and so therefore it looked like it just didn't want to go down, and sure enough, it has turned and is rallying. Now, the real question is, does this mean the corrective action that's going on has ended? And I think there's a good chance that it has. As I look at this, I mean, it's not super bullish yet, and this could be some kind of, you could say this was a first move. If this corrective action ended, if this is a fourth intermediate wave down, sharp, quick, what was 2? Okay, and from an intermediate standpoint, I'm best zooming out. Here's what I'm looking at, and this assumes we've got the wave count right, and this could be more primary instead of intermediate primary waves. But again, big strong 5-wave, third wave up like here. This second wave, notice how it was kind of an extended flat correction, and so you would expect then the fourth wave, which is usually the opposite of the second wave, to be shorter and not so deep. Okay, shorter and shallower. Well, there's a real possibility that's what we just got, a zigzag, shorter and shallower on the 3. Now, I'm not quite sure whether that's enough, but you could then make the case that this is a minor wave 1 and a choppy wave 2, and then starting some kind of 3, although little bit cautious about this, because just by the way, a lot of this overlapping in here, we have not quite closed that gap yet, and that could be a short-term target of what it's trying to do. The bottom of the gap is 46.30, and the high on Friday was 45.58. So kind of watching this, and a lot of times too is the you look at the corrective actions contained by some kind of trend line. This, if it broke through this trend line, it would kind of confirm to me that it's high probability that we're off and running in a fifth wave up to the high side. So we'll have to see. All right, the last one we're going to take a look at is Facebook, and there it is. Okay, Facebook, from a wave count perspective, I think Facebook is pushing, and of course this is acting like a third wave, this strong move that it got up in here. But there's some concerns that I've got, and let me back on down and look at the wave count. Okay, so I think we had a big 5-wave initial primary wave up here, second primary wave pullback, and that we're working a 5-wave sequence to the high side. And so we're getting this real choppy combination type of A, B, C, X wave, A, B, C type of thing. And again, I haven't labeled that out. A lot of times these are so messy that, it's almost not even worth the effort. You have to start looking and watching and see, here's what got my attention. this looks like a little 5-wave move to me. This looks like an A, B, C, then a flat 4th wave, not A, B, C, 1, 2, 3, then a flat 4th wave, A, B, C, then the 5th wave in completing a first minor wave up, and then you get a second one, and then a nice strong third, okay? My concerns are that when you look at it from a overbought perspective, I'm not getting any divergence, okay? So I'm not getting any divergence on this that would say it's negative, you should sell. But notice how Facebook has sold off without that, without negative divergence when it got to overbought territory, okay? When it got near overbought up here, it got overbought here and then sold off. The other thing is I'm noticing that whenever Facebook gets outside the Keltner channel, it doesn't stay there very long, okay, or touches the Keltner channel, which is where it's at right now. It's got a first day. Now, again, if it's been chopping in a sideways correction, that would be a reason for that to happen too. When you get in impulsive moves, it has a tendency to stay there a little bit. Look at this move. Gets outside the Keltner channels above the dotted line, and it just stays there and rides because it's in a strong wave 3 impulsive move, and then it pulls back, and then it does it again, and it rides above the Keltner channel. So once you get into an impulsive wave structure, it has a tendency to ride above there. When it's in corrective action, it doesn't. It gets overbought and oversold, fairly quickly. So the real question is, are we breaking out into something new, into a new move to the high side? I would be very cautious. Now, granted, you look at this, it looks like parallel lines. I drew this line here and drew a parallel line and put it at this point, and that's what we're getting, okay? But I would be very cautious about just automatically going. So if you're going to try to sell this or buy puts, just make sure you've got a real defined stop as to what your risk is, where you're going to be wrong. Don't do it and then turn around and go, oh, I hope it goes, I hope it starts to turn for me if it keeps going higher. So right now, I would be watching for a pullback to look to see if this is going to go long again. And that's what I'd be watching for on Facebook. I think there's a decent chance that Facebook is breaking out to the high side. All right, long video. I will have all of this indexed on a timeline, so you can go to that section of the video. I'll tell you that on the post and everything. So anyway, we'll be back tomorrow with a review of trade ideas, and everyone have a great weekend. Thanks.